Good morning, good afternoon, good evening, and good night. You're watching another episode of Engine Room, a podcast by Token Metrics. My name is Dylan Love, and I am joined this Wednesday, as I am every Wednesday, by our team of deep crypto nerds and experts. Let's say hello to Jacob, Forrest, and Bill. Good morning, guys.
Hi, good morning.
Morning, Dylan.
Hey.
It's a good week to be in crypto, I think. We've got Bitcoin holding above $54,000 and a lot of interesting news to pick through this morning. I think we should probably start with NFTs just because that's such a mainstay of what we talk about on a recurring basis. The NFT news that's going around like crazy right now it's actually not flattering news. It's an NFT rug pull, kind of a play on Bored Ape Yacht Club called Evolved Apes. Jacob, why don't you tell the people why why they should be careful about what NFTs they buy?
Yeah, sure. So the main point to take from this is do your own research. And on that note, let's dive into what happened. So investors spent millions of dollars on Evolved Apes NFT. Now, this is your classic NFT collection with 10,000 unique NFTs. And it was posted on OpenSea, where these evolved apes were fighting for survival. Only the strongest ape will prevail, where they mentioned a very hyped up fighting game, which hasn't happened. A week after the project launched on September 24th, the anonymous developer known as Evil Ape, which kind of an ironic name.
It's a little on the nose, isn't it?
Yeah, who promised the game, vanished along with the project's official Twitter account and website. But obviously, since it's on blockchain, you can see all the transactions. They siphoned out 795 Ether, $2.7 million of the project funds and multiple transfers, and they kind of just disappeared. They're gone. And investors have been investigating this since it happened. After the public sale on September 24th, there was kind of some red flags because the announcements seemed unprofessional. Several of the leaders kind of also disappeared, and the community also discovered that there was a social media competition where these winners hadn't received their NFT prizes. And I mean, a lot of people are upset, and this is why you really have to kind of do your research, figure out that a project's legit, because I mean, like we've said before, anyone can really make these JPEG images. Obviously, it takes some artistic creativity, but you could just computer generate it, sell it for millions of dollars, and leave.
Is this the first NFT rug pull of note that we've seen? I don't really recall NFTs being the operative part of a scam in the past.
Yeah, I mean, on the top of my head, I can't think of any others, but I'm gonna say no, that this is not the first one. But I can't give you another one. But I do want to say kind of some good news out of this bad news that came out is that the Evolved Apes community kind of came together, and they plan to carry on the project. So even though the project creator left, there's still these 10,000 Evolved Apes. They're still there. They still have these JPEGs. So the investors said that they're actually going to build a new project built around these 10,000 NFTs called the Fight Back Apes. So it's a way for them to fight back against the evil ape creator, and they're gonna have all the holders of the current Evolved Apes will be approved for an Fight Back Apes token, which will be linked to every single art. And this is a way for their community to really fight back against their nemesis, Evil Ape.
That's a pretty cool narrative.
Kind of, yeah, it's really cool. I'm glad they're taking back.
Yeah, I feel like part of the reason people, aped into this was on such severe FOMO. And if we're going to talk about, FOMO and markets moving like crazy, we got to talk about Shiba Inu. I know that Shiba has kind of been probably the market mover of the week, which is, it was trading for a fraction of a penny, and now it might be up to like a few pennies. I don't know the exact numbers involved. But I mostly understand that this is all attributed to social media hype, and I kind of want to throw it to Forrest to pick this apart for us. What's the deal with Shiba Inu this week?
Yeah, it's Shiba Inu, in my opinion, it's just a game. It's I'm not going to call it a pump and dump, but it's just a game. They market it really well. They get people to believe in it. It's a meme coin. Right, we saw a big meme coin run when Shiba Inu originally pumped after Dogecoin pumped. it's a game of musical chairs, and people are voluntarily playing it. It's like people know that they're going to lose money if they step into a casino and gamble. People know they're going to lose money if they buy a lottery ticket. To me, this is no different than that, but there is some skill involved because you can potentially trade it, right? You can trade it, make profit. If you're a better trader than the other people playing the game, it's just gambling with some skill involved, right? I don't necessarily have a problem with it, but it's so corollary and tangential to crypto and crypto investing. To me, it's just two very different, distinct things. Like people who buy Shiba Inu, like it's not in the same realm to me as like Bitcoin and Ethereum. Although it technically is built on Ethereum and it's technically a cryptocurrency, like there's not like a really good use case for it. It's essentially just a meme coin. So like, I don't think it's smart to invest in Shiba Inu unless that's your investment thesis that meme coins are going to pump and do well. But I think it's fine for the space as long as people recognize what it is and treat it accordingly, right? You see it on the same charts as Bitcoin and Ethereum and Solana and all these layer one protocols and other cryptocurrencies that are innovating and really doing something in the space. And then you have this meme coin also pumping. But this meme coin, you have to understand, is it's like gambling. It's like a lottery ticket. It's you're playing a game against other people of, who can buy it low, ride it to the top, and then get out at the top. To me, it's just a game. It's not investing in tech, right? It's very two different things. And I think as long as people separate those, I don't necessarily have a problem with it. It's just the fact that it so often is associated with really, it's in the same realm as other cryptocurrencies that actually do something and actually should go up in value and are actually innovating and actually providing value to the space.
Yeah. So along these lines, I was reading up on crypto trading bots and doing a little bit of research myself yesterday. KuCoin actually makes it very, very easy to set up your own trading bot. And what's interesting about the way KuCoin operates is that they will publicly post, well, and it's all anonymized. You don't know who these people are, but you get to see what bots people have made, and you get to see their return. And every single bot that I looked at last night was trading the Shiba USDT pair and posting returns of many thousands of percent just because the price action was pretty much out of control, all within a very tight range. We're still talking less than a penny, but there's real money to be made if you're doing that at scale. If you're throwing $10,000 at a trading bot that knows how to take profits intelligently. I don't know, just very, very interesting to me that it makes me think of Dogecoin, the cryptocurrency that's literally started as a joke. Now we have Shiba Inu, this cryptocurrency that seems to mostly serve as like a public reference for crypto. It's like a big in joke perhaps for the crypto community, and people are making many thousands of percentage points of return on it.
I think it makes sense why people are making such great returns on it, because like Forrest was saying earlier, it's gambling, and as long as you can trade better than someone else, you're going to make returns. And if you have these trading bots, you have this AI software that can really track the price movement and figure out when to buy, when to sell. Your competitors are a bunch of I don't want to say degenerates, but kind of degenerate retail investors who are just aping it. So if you have some trading knowledge, if you have kind of a one up with your trading software, you're almost always going to make money when you're compared to 99% of the other people buying and selling Shiba Inu are just retail investors who don't have knowledge. So it makes sense why there's thousands of percentage of returns.
Right. I have a sheep theory.
Lay it on us, Bill.
So who's buying sheep? I would argue everyone who missed NFTs. Like, I know for a fact that there are a lot of people in crypto who are bummed because, NFTs, you really got to be sophisticated to get that 10x returns. It's almost like poker, right? You've really got to know the game to really make those 10x returns. So if you missed NFTs because you didn't have 1 ETH to buy in on the floor, or when you bought a mint, you didn't get the rare one. Oh, wow. Here's an old fashioned speculative trade. Like I remember when Sheeb and Doge were like the scandal, right?
Uh-huh.
Ooh, it's me. Now you have the NFT casino. So anyone who missed out bought Sheeb. Now on that theme, I'm seeing people in the crypto universe solely talking about NFTs, simultaneously bragging about their picks while warning everybody of what happens when the music stops, are actually referring to like big cap crypto as like legacy crypto. Like Bitcoin and ETH are now legacy in the minds of the NFT players. Now, why am I telling you this? Well, Sheeb, NFTs, trends always last longer than you think. So Sheeb, NFTs may be in like a blow off phase where it becomes like a mania for anywhere from a day to 2 weeks. All right. But you have to ask yourself, if you play, okay, what happens when the music stops? And this is the most important value add. Is there such a thing as value investing? Sheeb was dead 4 weeks ago.
Mhm.
So technically, if you had bought Sheeb 4 weeks ago while it was literally dead, you were value investing in something that turned around and moved. I'm wondering if there's going to come a time, or if there is a time now, where there is such a thing as value investing in NFTs, either before it totally goes crazy or after it ends badly.
I mean, yeah, Bill, I was just complaining to Forrest in chat the other day. All I want in this world is to know today what will happen tomorrow.
Don't we all?
Right. And that applies so heavily in NFTs. As a matter of fact, sometimes I think the Bitcoin bid is big players who have missed out on all the profits all along in 2021, and they're just FOMOing into Bitcoin. So we're entering into a gigantic frustration trade.
Mm-hmm, mm-hmm.
Luckily for us, it means crypto goes up rather than the usual frustration trade where it goes down and everyone rage quits.
Yeah, yeah. Well, speaking of frustration, let's talk about the Pandora Papers, because this is just more momentum added to the people. I feel like there's an evolution of how people are beginning to really understand how money works, and those ideas are starting to change, because the Pandora Papers came out this week, and so what are the Pandora Papers? Let's read a little bit of CoinDesk. This is reporting by David Morris at CoinDesk. The October 3rd release of the so-called Pandora Papers, a trove of 12 million leaked documents from law firms and other organizations around the world. The documents unmask the previously unknown owners of 29,000 offshore companies hiding billions of dollars in assets from taxation or oversight. The owners include political leaders, celebrities, and underworld figures from more than 200 nations, with the bulk from Russia, the United Kingdom, Argentina, and China. So this seems to me like this is basically a sequel to the Panama Papers. Now, as of this week, we have yet another window into how old school money hides and avoids taxes, and kind of how wealthy people stealth things up, basically, whether it's legitimate money or shady stuff. So who got called out here? British Prime Minister Tony Blair, singer Shakira, and many other familiar faces. I feel so, not to paint with a broad brush here, lots of what these people are doing is perfectly legal. But it does kind of make, the retail investor kind of raises an eyebrow at this stuff, because it's very, very easy to say, oh, you're concealing that much money. The total, I'm just going back to this Coinbase article, CoinDesk article here, 15 times the total value of all cryptocurrency in existence. So the Pandora Papers account for 15 times the crypto market cap. So the article makes a little joke about the term whataboutism. So it's very easy to say, oh, crypto is just for illegal stuff. We have to regulate the heck out of it. We have to get rid of it. Well, what about the cash that drives, it's 15, just this instance is 15 times the size of the total crypto market cap. What about that? It's very interesting to me that within all the Pandora Papers, there's not a single mention of cryptocurrency. This is all old school money, conventional legacy fiat stuff. I want to call out Bill Gates a little bit because in February, I'm reading Market Watch right now. Bill Gates went on the record with Market Watch saying, the way cryptocurrency works today allows for certain criminal activities. It'd be good to get rid of that. He quickly added right after that, I probably should have said bioweapons. That's a really bad thing. But at any rate, it seems like cryptocurrency at large is the lazy man's scapegoat for financial fraud. When really the easiest instrument of fraud is the good old US dollar. I don't know what do we think about the revelations of these papers? What kind of themes can we be thinking about for our own crypto investing, and what does this stuff mean for crypto?
Well, I can start on that.
Please, Bill.
So for things like money laundering, every year, big bank compliance training will remind all of its employees that there's always some big bank getting caught on money laundering and paying some huge fine, despite, very elaborate, tight controls. So criminal activity ranges across all currencies, not just crypto. Now, one of the things that wealthy people don't want to hear, strangely, is that they may need crypto as part of their portfolio if there's ever a wealth tax, a problem with the payment system, taxation issues, or, like I said, government going into your account and taking money out, right? That's really why these people move money around the way that they do, because they don't want the government, either it's taxes or wealth tax. But when you tell people that crypto, on a cold storage is the way to do it, they just turn their nose up. The Bitcoin rally this time, or crypto moving this way, is getting the attention of the big players. And the traditional ways of preserving wealth, like what's in these papers, won't work 5 months, 1 year, 5 years from now.
Does that mean that we're just setting up a new system where in the future we'll have like a kind of crypto-enabled Pandora thing going on?
We're setting up a system to where if people want to protect wealth, preserve capital, and have proper diversification without winding up in one of these white papers that you've discussed, owning crypto is fairly straightforward versus winding up on the front page of the New York Times.
Yeah. I mean, I can only throw Michael Saylor at you, who says if you've got $1 billion and you want to make sure that your grandchildren and their grandchildren are around to get it, or that it's around for them to receive, Bitcoin is probably the best and easiest way to make that happen.
Right. He noted yesterday that Riot Blockchain, a blockchain mining company, pulled out 400 something Bitcoin last quarter. How much of it did they sell? Zero. They're putting it on their balance sheet. And a lot of these wealthy people need to be asking themselves, it's not what's in your wallet, it's what's on your balance sheet.
Well, let's turn to this Bank of America research report, because this seems to dovetail nicely with the theme that we're talking about. Guys, the secret is out. Big banks, they're beginning to recommend cryptocurrency investment to their customers, whether it's, it seems pretty universally to be in very small amounts. They're suggesting, I've heard 2%, 5%. I have not heard more than 10%. But my only point here is that old school banks are beginning to really recommend that that their customers have some Bitcoin or other cryptocurrency. This week, Bank of America released a gigantic report. We're only going to talk about a small section of the report, but the big picture on the report is that it's very, very positive about digital assets as an investment class. What we do want to focus on here is their top 15 picks for crypto investing. So Forrest, this one screams you, man. So let's pick this apart. Let's talk about what we perceive to be their hits and misses here.
Yeah. So one thing to note is I think Bank of America kind of butchered the presentation of what they actually, the 15 cryptocurrencies or altcoins that they presented here. And then it got further misrepresented by, it looks like, the articles on Business Insider, because Business Insider came in and made a headline that says, these 15 little known and undervalued tokens could experience an ether style surge due to significant developer interest. So really, getting kind of clickbaity here and misleading the way that they actually pulled this information. So what they did in order to pull these 15 cryptocurrencies is they just pulled the 15 cryptocurrencies that aren't in the top 15 by market value, by market cap, that have the highest number of blockchain repositories on GitHub. So basically the most activity from developers. And then they just used this as their 15 picks, which in one way is, I don't know if that's that's the metric that I would use to actually pick my 15 cryptocurrencies. If I was Bank of America, that just seems like a really weird way to go about it, but maybe they don't have the expertise yet to really pull it. I don't know exactly what they were thinking, because what ultimately comes back are these 15 cryptocurrencies, many of which, I'll give my brief opinion on them without sitting and defending that opinion, because we just don't have time for me to tell you why these 15.
Let's hit the top 5 or 10 here.
Yeah, so Internet Computer, new, jury's still out. Phantom, great cryptocurrency. Tron, pretty much hot garbage. Waves, not familiar enough to really give an opinion on that one. Cosmos, great cryptocurrency. Neo, really not a fan. Filecoin, pretty solid. Ethereum Classic, hot garbage. Monero, quite good for what it does. It's a privacy coin. Stellar, pretty solid. EOS, could go either way, but not phenomenal compared to its competition. Near Protocol, from the things I've read some pretty positive things about Near Protocol. IOTA, not popular among a lot of crypto people and crypto analysts. I'm personally a big fan because it uses the same technology. It uses DAG technology, which is very faster than traditional blockchain proof of work technology. That's the same technology that Phantom uses. The Graph, solid project, and Tezos, not the biggest fan.
Right. So there's a way to look at what investment banks are going to start doing in crypto. And I know this for a fact from working for investment banks, is that analysts are literally required and judged to be out of consensus. So Bank of America, Morgan Stanley, and all these places cannot write reports that say we like Bitcoin, Ethereum, Solana, Avalanche, Phantom, Nano. They can't write that. They have to come up with a methodology, and they have to be outside consensus. So you're going to get a lot of unusual things from banks. Unfortunately, I know that there's NFT rug pulls where everyone goes, ooh, that's scary. And then there's SHIB rallying, which everyone goes, ooh, that might be scary. But the thing that scares me the most are these giant reports from investment banks where they FOMO into crypto pretty hard, and then they kind of force pick something. Like they know on YouTube, the only way to get anyone's attention is to say, oh, here are my picks, right? So they have to say something, and they may be forcing it. And as Forrest knows, there's not always a good trade in the system. So when banks start forcing picks, I get a little bit concerned for the overall market, actually.
Yeah, I mean, you're making me think of Warren Buffett, who talks about value investing as a game of baseball, and you get as many pitches as you want. It's just a matter of waiting. So if there's not always a right time to make a trade, then you need to have the discipline and patience to be comfortable sitting there doing nothing. And that seems to be kind of the opposite mentality of this report, the opposite spirit, which is, oh, these 15 cryptocurrencies are potentially poised to pop because we have lots of developers building on top of them. So don't you want to get in before the secret's out? I think the secret's already kind of out. I think there's a rising tide across all cryptos, broadly speaking, and this stuff isn't going away. You can't unplug it. You can't turn it off. It has a certain inevitability about it, as all major technology does. The internet was just a drop in the bucket in 1992, and look what we're doing now.
Right. And on this report as an analyst, actually, I'm going to go a little bit the other way and say hats off to these guys, because, it's tough as an analyst when you've got to say something, right? In other words, Bank of America writing a report about crypto wasn't optional. They hired two guys and said, write about crypto. So as an analyst, it's tough to say something, maybe even if there isn't something to say. So believe it or not, I'm giving my hats off to the two guys that actually wrote that report. Like, good for them, whether they're right or they're wrong, respect.
Yeah.
Also want to draw attention to the fact that the reason Bank of America and a lot of other big institutions are having to come out and do this kind of work is because they missed it. They missed the boat on crypto, and now they're playing catch up. And I think one of the main reasons they missed the boat on crypto is because if Bank of America came out in 2019 in support of crypto, it would have been a PR nightmare. In 2019, crypto was dead. Bitcoin had fallen down like 70% from its all-time high. I mean, like you can't, Bank of America, what's happened in crypto has happened so fast that the media's perception and the average person's perception of crypto has gone from pretty negative or non-existent to very positive and very present in a very short period of time. And that's happened so fast that these institutions haven't been able to keep up. So now they're playing catch up and having to print that. So it's really interesting what we're seeing happen, and the overall shift in mentality towards crypto in the world that we've seen over the last 2 years. It's actually pretty bullish.
Yeah. I mean, Mark Andreessen famously said, software eats the world. Cryptocurrency is the software of money. So banks are getting eaten, and they're noticing. Now they're noticing they've been standing on an nest of ants for the past many years.
Don't forget this idea that stocks are also going lower, right? So it looks like their staple is going lower as crypto is going higher, adding to the pressure. Go ahead, Jake.
Yeah, no, I was just going to say, I think it's funny. Like, I agree that it's good that these big institutions, these big banks are finally coming and saying, hey, we're bullish on crypto. But it's like, to all of us crypto investors, it's like, we've been saying this all along, like we're bullish on crypto. We're bullish on the prospects of digital assets. That's why we're in this space. That's why we like it. And it's like, the big banks, Bank of America, all these other major institutions have been bullish on crypto. Their analysts, if there was no restriction on it, probably were buying crypto years ago. So it's just now that it's mainstream, now that it's cool to like crypto, now they can say, hey, we're actually bullish on it, and not, like Forrest said, get some crazy media backlash.
Well, guys, I feel like we're drawn to a pretty natural close here, unless anybody has any parting thoughts or any last minute stuff they want to raise. And on that note, they were silent. Guys, the name of this podcast is Engine Room. You can subscribe to Token Metrics on YouTube. Please give this video a like. You can also find us in your favorite podcasting app. Just do a little search for Engine Room and subscribe. We are here to help you make sense of the noisy crypto world. And if you have anything that we can help you with, reach out. Our social media is out there. Our email addresses are not too hard to find. Just get in touch, and we are here to serve you and help you make sense of what's going on in this world. At any rate, that'll do it for this episode of Engine Room. Thank you for listening or watching.